In January, prosecutors concluded one of the last multibillion-dollar settlements related to the 2008 mortgage collapse. The deal, with Credit Suisse, required the bank to pay $2.48 billion to settle allegations that its securities unit had misled buyers of home loan bundles it had sold between 2005 and 2007. Credit Suisse also agreed to provide $2.8 billion worth of financial relief to troubled borrowers under the settlement by forgiving or modifying mortgages and helping to finance affordable housing projects across the country. When they announced the $5.28 billion deal, prosecutors cited it as evidence that the United States government can and will ride herd on large financial institutions if they engage in misconduct. Today's settlement underscores that the Department of Justice will hold accountable the institutions responsible for the financial crisis of 2008, said Loretta E. Lynch, the Attorney General at the time. A little more than 6 months later, it's worth asking, how tough, really, was the settlement on Credit Suisse? An answer to that question emerges in a new report compiled by the Independent Monitor hired to scrutinize how Credit Suisse was living up to the terms of the deal. Put simply, some of the settlement's terms, those involving consumer assistance, were easier on Credit Suisse than aggrieved investors and borrowers may have wanted. The settlement terms relating to consumer relief are complex. They allow the bank to earn credit toward the $2.8 billion in consumer help by modifying troubled borrowers' loans. How much credit is earned by the bank depends upon the types of modifications it gives to borrowers. One of the monitor's tasks is to ensure that Credit Suisse receives only the credit that it has truly earned under the deal. This is no small task. Under previous settlements, for example, some banks received credit for forgiving loans that had already been discharged in bankruptcy. Neil M. Barrow FSKE, a partner at Jenner & Block, is the Credit Suisse monitor. You might recall M.R. Barrow FSKE from his stint as the first Special Inspector General for the Troubled Asset Relief Program, which administered assistance to beleaguered banks, homeowners, and other entities after the 2008 crisis. M.R. Barrow FSKE declined to comment on the report, which looks at the first 6 months of the bank's loan modification and forgiveness efforts. A later report will focus on the bank's financing of affordable housing. Nicole Sharp, a Credit Suisse spokeswoman, said in a statement, as the report highlights, Credit Suisse has taken a number of positive steps since our settlement with the Department of Justice. She said the bank was moving to put this legacy matter behind it, while also protecting the interests of its clients, employees, and other stakeholders. So far, Credit Suisse is working diligently on the consumer relief aspect of the settlement, the report said. It is meeting the deal's requirements through its loan servicing unit, Select Portfolio Servicing, or SPS. There is no doubt that the bank's efforts are helping distressed borrowers and will continue to.